Good afternoon, Colorado, man. It is a beautiful Thursday. It's been absolutely gorgeous all week, so I just hope we get some snow. Goodness gracious. But I hope everybody's doing well. This is Josh with K4CO Radio, just waiting for our producer, Sabino. Give us a thumbs up. I have Sarah, our vice president of K4CO. What's up, Sarah?
Hi, how are you?
I'm doing all right. You?
I'm great. Happy Thursday, everyone.
Happy Thursday. That's right.
Few days before Valentine's Day, so go squeeze your loved one and say, give me some chocolates. Take me out for a good dinner.
I wonder what our guests are doing for Valentine's Day.
That's so true.
We're going to have to ask them.
I know.
For all the people listening on K4CORadio.com or the K4CO Radio mobile apps, or one of the many internet radio directories that we're on, do you know that you can go to K4CO Radio's social media platforms, and you can see our wonderful, beautiful faces. And if you have any questions or if you have any comments or anything like that, you can throw them in the comments on the platform that you're watching, and Sabino will alert us to those if we can get those answered or anything like that. So if you are driving, just stay with the app, and you want to be looking at the cars in front of you.
Agreed.
Yeah, exactly.
Paying attention. Don't drive distracted.
No, not at all. I'm going to start this out. I just have to, because we have not had the ability to speak with them in person since the Broncos game. We have Michelle and Tim Oddo, who go to a lot of games, and they were there in the cold. We were there in the cold too.
This is the AFC Championship.
This is the
for
AFC
those
Championship.
that are possibly listening to outside of Colorado. The Broncos made it this year, so close to the Super Bowl.
And just completely threw it away.
Broke our hearts.
Broke our hearts, exactly.
And we were freezing.
Yeah. We were, and we could have easily won. And then if we would have won, I think the Super Bowl game would have been so much better.
100%.
You know, that was kind of a boring game.
It was the worst Super Bowl I can remember. It was so boring for 3 quarters.
He kept switching to curling.
I was watching curling, and it was actually better, Sarah.
Well, that being said, there were 5 kicks, 5 3-pointers, of course, field goals that have never. I know it was still boring.
It was,
but at least that broke some records.
I thought the same thing. If we had Bo Nix, we would have won that game.
We would have won.
We made some questionable coaching decisions. We still could have won the game with Stiddy, and we would have given them a better game. Our defense, I think, would have played better.
Completely. We should have gone for the field goal in the first half.
Yes, exactly.
Everybody feels that
And we
way.
would have won that game.
Completely.
Yeah, so many things that we were like, huh?
Yeah.
Why are you doing that?
Very questionable.
But yeah, the snow, all that just really added to the misery. I mean, it was fun. It's a memory, but it definitely was. You had to be a true fan to hang in there.
But I'll tell you this. I was telling Josh, I kept looking up at the big screen, and they would just kept flashing people all over the stadium. And crazy in the second half when it was a blizzard out there.
Yeah.
And nobody left. It was rocking.
Yep.
And I was so proud. I mean, we know we got awesome fans here, some of the best in the whole NFL. And our fans were like to the end.
To the bitter
end.
end.
And then it was just like over. All of a sudden it was over, and everybody was just like head down, like It was like
So
it just
sad.
ripped your heart out.
It did. It was so interesting. As we were exiting and going down to our car, I turned to Josh and I said, this is the quietest I've actually ever heard right after the game before from the fans. It was almost eerie.
Very eerie.
It was. It was just, kind of stunned.
Everybody
like,
just shuffled out.
Yeah, what did we just
Their heads
watch?
down.
We shouldn't have lost, but it was. We were all just kind of in stunned. What just happened?
Yeah.
Well, and we just got our bill to re-up tickets for next year. It's feels a little like, salt in a wound. Like,
It's a little raw right now.
Now we got to pay for these tickets after but anyway, it was a great season. So I am excited for the
I want to do it every other year.
Yeah.
Okay. Well, there are ways
can't.
with that.
I totally can't.
Well, and speaking about getting the bill too, I had to throw this out there because the new stadium and everything like that. We still don't know what's going to happen with that bill.
Right.
Yes.
But I will tell you that AFC Championship game, what I loved about it is I think when we have the new stadium, we are never going to experience football like that again. Because I honestly think with the retractable dome, they're going to be like, it's raining, close the dome. It's cold, close the dome.
Yeah.
And this is the Mile High City.
Yeah.
That's what football was all about.
Yeah.
Was that day.
Yeah.
Yes.
That's right.
Even
It
in the
should be hard.
stands.
It should be difficult. It should put these guys under pressure.
Yeah.
Right? Yes.
I love the snowblow guy kind of blowing the snow off of the line markers. And,
Yes.
it was wonderful.
Such a good memory.
It was. It was.
Yeah.
great.
Agree.
So I had to get that out of the way.
I like it. Yeah. I know we've never launched without introducing people first. People just already know you guys. Yeah. So that's amazing. So for those of you just tuning in, we do have Michelle and Tim Oddo, some of our most favorite people on planet Earth are here. They are the owners of the Oddo Group, and you can find them online at oddogroup.com. That's ODDO group.com. And they specialize in kind of different things. So they have reverse mortgages included in this, and of course traditional as well. So if you are watching online, of course you're going to see their information. But if you are driving or listening on the mobile app, you can contact Michelle at 303-961-6906. Or you can contact Tim at 303-233-4500.
That's right.
And they truly are the loan experts for so many different reasons. They're experts for knowing everything that you need to know. They're very creative. We are actually going to utilize their services moving forward because we feel so confident in who they are. And it's good to think outside of the box. And you both do that very, very well. And as well as, high touch is what you all talk about. And it's that personal touch that we, of course, really love. So thank you for coming in, and Happy New Year and happy Broncos and all the things.
Thanks, guys.
Happy.
Yeah.
And rates just kind of went down a little bit.
Yeah.
Right? So
it's been weird. It was a weird week. Monday rates. So what's today? Thursday. Okay. So in the last 4 days, including today, we had rates that were looking great, low. We had like some nice low. Then we had some dip or some a kind of a huge upswing in rates yesterday. And then today they came back down again. And so a lot of it had to do with job reports and what came out from the, regarding job reports versus what is actual. And it really affects the interest rates. So the bond market went a little nuts yesterday because the job reports read like there were way more jobs than we thought we were going to have and all these things. And then this morning, I think the bond market's like, yeah, that's a bunch of bull, because a lot of those jobs, number one, were health and education. So they're important. We need them, but they don't move our economy like small business, community, corporate jobs, things like that. And then secondly, a lot of those jobs are, we're in a gig economy. So we're seeing a lot of people, when they lose their job, not necessarily getting unemployment because it's not enough. So instead they're working on, Lyft and Uber and pizza delivery and side hustles and all the things. Yeah. So it just skews the numbers is what I'm saying. Sure. But at the end of the day, today things kind of rebounded. And to your point, Josh, we're finally seeing like those really nice low 6% interest rate, maybe high fives, depending on the deal. And makes us so happy.
Yeah, that's a good spot to be. Is that where, I know none of us have a crystal ball. And March is in 2 weeks. So that kind of, I know, isn't that crazy?
Where'd that come from?
I know. The beginning of the year always just comes like a bullet. Is what is quote unquote predicted and what you all are feeling in the market of that it's going to stay in the low 6s, 5s moving into the springtime when really the market starts to heat up a bit?
Yeah, I mean, definitely the predictions are there for that. All the indicators point that direction for sure. Again, inflation's down. The jobs, we don't like seeing loss of jobs. Nobody likes that, but it is good for interest rates. So when the economy's not doing great, rates come down a little bit. So we do think that we'll see a continual, at least steady, and maybe even hopefully we'll see some more drops between now and the end of the year and then begin into next quarter. And then everybody's hoping for, 5s. We want to see things in the 5. Somewhere in the mid 5s would be really
Let's go low 5s while we're at it.
Let's go low 5s.
There's a lot of pressure to bring that down, Sarah. And as inflation comes down, rates follow inflation. And really, they say the true inflation numbers are even lower than what they use to calculate, to use as a gauge or a barometer. So hopefully we'll continue to see that. And I think the market and the administration there's a lot of pressure to try to get, they know we need to get the rates down to help affordability a lot.
Yeah, it's been interesting here in Colorado with just the rising of costs of everything across the board, of course, housing market, but it really is. It's education, it's food, it's transportation. We've seen it collectively And it does to have, I think I heard a statistic from our legislators in Colorado a couple of weeks ago that 50% of Colorado residents are now in Medicaid, which is almost unheard of in our state.
50%.
50%,
Wow.
just because of the cost of living is so higher than it's ever been. So it'd be wonderful to get people more, be able to afford a home.
Yeah.
That's what we're all after. And I was curious, I know you have amazing questions, but you do. He knocked it out of the park, as he always
really
does.
did. I read them. I was like, man, Josh
I know.
did
I'm
good
so
on this.
glad I didn't do it. I'm like,
we
damn,
looked at it and we're like, are you sure that Sarah didn't help with these jobs?
No.
We asked him that.
100%. This is all him. Because you all do come up with very creative and inventive ways of getting people into a mortgage. So what are you all seeing, especially with jobs like Uber and Lyft and et cetera, more independent contractors? They're not always W-2 employees. So what are some of the programs that you are seeing more of?
Good question. I don't mean to keep talking, but Tim does reverse mortgage and I do the forwards. So this question's more toward me. I'm sure you'll have.
I can answer this question.
Some reverse questions.
I have something to
I don't know
say.
if it'll be the right answer. No.
Can you imagine living in this household when both, everybody wants to talk?
I think you both are lovely.
Oh my goodness.
Okay, the story is we have a lot of programs for those types of things, which is great. So some of the examples would be self-employed people have tax returns that maybe they make great money, but we get to write a lot of things off as a self-employed person. So the bottom line net income doesn't always match the true income. And in those scenarios, we can use bank statements. So we could use 12 or 24 months, either personal or business bank statements, and average the deposits. Depending on the type of business, we'll apply some sort of an expense ratio to those deposits, but nowhere near what you might be seeing on the tax return, if that makes sense.
Yeah.
Also, if somebody is a 1099, just a contractor like that, we have a program where we can just use the 1099 and do an expense ratio on that. We have, you mentioned like investment properties. We can do what's called a DSCR loan, where we only use the rent. We only need the rent on the property they're buying to offset the payment. That's it. So if somebody is an investor and they have a ton of properties and their tax returns are complicated and all that type of thing that holds people back from moving forward, they're nervous, they don't know if they'll qualify, it's too much of a pain, all those things, that DSCR loan is really great for an investment property, because again, we just need an appraisal and their credit, the down payment, so bank statements, and then rent on the property.
Okay.
So lots of different programs and creative ways to help people get into homes that maybe they have the money. We're not looking to do loans for people that don't make money and they make up pretend money. That's not what we're talking about. We're talking about people that do have the funds, they do make the income,
but maybe they write everything off.
They write it off. They're not documenting it traditionally, but we can document it through other means like bank statements, leases, etc. Because you still have to be able to show that they can make the payment. You're just not using traditional methods.
For sure. And I so appreciate that as an entrepreneur, and so many small to medium-sized businesses are putting it back into their business, right? So it's really interesting. If you actually show it a loss at the end of the year, you're like, well, we actually made money this year. So how do we show that? So it is nice to have all these different programs.
That's the age-old problem, right? As a self-employed borrower, you have expenses and you want to take advantage of those. But when it comes time to talk to your mortgage broker to qualify for your home loan, they're like, you're not helping. You're not helping yourself.
Like,
right?
I swear I made more than $50 last year.
Yes,
I promise.
No, that's not what I told. No.
Also, a lot of lenders only either use AI to do the tax returns, or they have like a worksheet and they fill some things out. They don't really know how to go in and really read the tax returns. A lot of like loan officers up front. Usually your underwriter will, but I've seen underwriters miss this stuff too, especially if they're using just strictly AI. And a lot of times there's things in those tax returns that if you understand tax returns, I underwrote for a lot of years, way before we had AI, and I really understand how to get into those tax returns. And there are things we can add back that maybe get missed. Sometimes the business had a loan that's being deducted, but now that loan's paid off. Sometimes some of their car payments or other things are being paid by the business. So we don't have to hit them with the payment and deduct it from the income. Sometimes, there's depreciation. There's a lot of things in those tax returns that if you really get in there and dice them, slice and dice them, you might find a lot more income and not have to use an alternative program. So that's the other thing to just be aware of, is that just because you've been told no doesn't mean that that lender really understood what they were looking at. And we do see that a lot.
Mm-hmm. Yeah. I like that you said it's not invisible income. You actually have to prove it. Yeah, we don't want 2008 to happen again.
Right.
We're all losing our shirts.
Right.
So.
Yeah, we don't want like grandpa, fixes bicycles in the garage and he makes, $40,000 a month. Like, that's the stuff we saw in 08. You're like, oh, for sure.
I mean, listen, it could happen. It could happen.
Could happen, yeah.
Well, true. If they're motorcycles and they're, very rare
Orange
bicycles.
County choppers or something.
Yeah. I was trying to think of the name.
Nice.
And additionally, in the reverse side, when you're dealing with borrowers that are 62 and older who are retired or semi-retired, it can also be very hard to qualify, right? Because you're trying to, Michelle will struggle to qualify somebody on Social Security income alone because they have to make a payment on that loan and they have other debts potentially. Mm-hmm. In the reverse side, we're not counting a monthly payment against them. There's no monthly payments due. So it makes it much easier, much more streamlined to qualify with somebody who's on fixed income. I'm doing a reverse mortgage right now. The woman only makes $1,300 a month.
Yeah.
So a reverse is going to be a huge saving grace to her because it's going to eliminate her small mortgage payment and actually give her a little extra monthly income on top of that. Yeah, which is huge.
That's awesome.
And on the reverse mortgages, I mean, how has demand changed with the current rates? I mean, I don't know, how do rates and reverse mortgages kind of go hand in hand?
That's a good question.
Because I mean, I definitely know on regular mortgages when you're
looking. I mean, great question. Reverse mortgages are definitely affected by rates as well. So a few years ago when we were down at all-time low rates and rates were in the twos, okay, then at that time when rates were at all-time lows, we could lend in the reverse world. What you can lend on is based on two things: your age of the borrower and the rates. So the lower the rates, the more money we can lend the borrower, right? Because if I'm starting at a 2.5% rate, in theory, they'll have a much longer runway. We're going to lend them a bigger loan amount, a higher loan to value, versus if the rates are at 7.5%, right? Then it kind of shrinks everything, compresses it, what we can lend them. The second part of that equation is how old you are. So Josh, if you're 62,
I could be.
Yeah.
When you're 62, yeah. Will it help? Well, yeah. In 30 years, yes, it'll be great. Okay. No, but if you were 62, we won't lend you as much as we would if you were 72 or 82. So we'll lend you more the older you are. Why would that be, Sarah?
Because you're going to die sooner?
Bingo. Yeah.
I didn't want to say that, but...
no, you nailed it. I mean, it's an actuarial loan, right? So somebody, I'm working with a woman right now who's 86 years old. Well, she qualifies for a lot more than someone who's 66 years old. Sure. Obviously. So it's a combination of those two things. So as the rates come down, Josh, it helps in my world because it makes more options and makes more loans possible. We came off of a high of maybe in the sevens, low sevens, right? And now we're back down in my world. In the reverse world, our rates are already at about 5.25% right now. So it's we're getting there, but we still need more movement to make it more accessible to more people.
Right. We're getting there.
We're getting there.
Slowly but surely.
Just not quick enough. Just not fast enough.
I'm curious, and this is, I'm mentioning this because this winter has been horrible. Absolutely horrible. So
With what?
Snow.
Oh, okay. I didn't know if you're talking about rain still or snow. Okay.
If we don't get a lot of snow coming in, we're going to have a horrible summer. Yeah. Especially, Colorado's already bad with wildfires and everything like that. And that impacts insurance premiums. So, how are rising homeowners insurance premiums, which are already rising due to wildfires, impacting mortgage affordability in Colorado?
It does. I mean, insurance and taxes. So you remember a couple years ago, we had a law in Colorado for many years, and it sunsetted. And basically that law kept taxes they could only raise them so much per year. It kind of held the percentage that the taxes could go up. As soon as that law sunsetted, taxes went up really high for a lot of people. Like I know ours went up at least a third of what they were, a third more. So to your point, taxes are a big deal in qualifying and making a payment affordable. And then property insurance as well. The problem with property insurance is a lot of the insurance carriers left the market. Like last year, we really saw a lot. we're starting to see some come back. We're starting to see quite a few come back, like Travelers and some of these. But there were so many that had left the market that the options were so limited, and then they could charge whatever. So I mean, the taxes and insurance definitely are a factor. There's things you could do to get that insurance premium down, like well, first of all, homes with, and we found this out. It was kind of a blessing by accident, but he was adamant he wanted what was the roof we did, babe?
Stone coated steel.
Yeah. So it cost us more money for the roof, but then our premium got cut in half.
Okay.
Which was really cool. So it'll, we'll weigh up. So anyways, if you're trying to get your insurance down, there's things you can do like, and you should talk to the agent because they'll give you some of these ideas, but you may not need a really low deductible. A lot of people choose these low deductibles and then their premiums are high. And it's like that insurance really is to be used for an absolute emergency catastrophe.
Yeah, right.
So if you just have a little leak, if you just have, and people do that, they'll use their insurance and they don't realize that they're actually going to get bumped off the policy just for using their insurance,
right.
which seems kind of ridiculous. Like, isn't that why I have it? But unfortunately, that is the case, and if you have, even some people had like one claim and they got canceled from their policy. So you just have to be careful. You should always call your agent and say, here's what happened. Should I make the claim or not? And kind of verify like, what should I do here? Because
here's a little hack on that. Like when it comes to a roof with hail, because we have a big hail issue here, don't call your agent first, because if the agent sends someone out there, even if they don't even reward it, it can be a $0 claim. It goes against you, and it's a strike against you, which can increase your rates. It can increase the likelihood that they could drop you sooner. So if there's a hailstorm and you want to know, find a reputable roofer, have the roofer come out, have them inspect it, and see if it even qualifies before you get the insurance company. You got to be really careful. That wasn't always the case.
Yeah.
Right.
But that's a nice little hack. You don't call your agent unless you have a great relationship with them.
Yeah, that's true.
Otherwise I would call a reputable roofer, have them come out, and because if he comes out and goes, there's no way you don't have hail damage, then shut your mouth and keep paying your State Farm.
Yeah.
Right.
Insurance.
And then there's other times where maybe it's not a roof, but like one of our friends is an agent, and he'll say, check with me before you make a claim, because maybe you don't need to make the claim, and he'll really guide you through it. So, so insurance is a factor, but there are ways to get that premium down, and it usually is. Obviously, credit scores actually affect your rate. If you have too many claims on previous properties, that affects your rate. If the home you're buying had too many claims, even though it's not your claims, you're buying a new home, previous owner had a lot of claims, that can affect your insurance. Also, how far are you from a fire department? I mean, there's a lot of things. So there are times where it's just...
I'm going to find out teenage boys' driving records can affect your rates too. Who knows?
That's your home rates.
Who knows?
Not our home rates. Okay. Our car rates are quite high. And they're not even teenagers
I was
anymore.
that kid. So
they're 20.
I got
20s.
booted early 20s.
Yeah.
Yep.
We have a 20 and a 22 that have definitely...
Do they have a lead foot?
Well, they could just be knuckleheads at times, all right?
That's
Let's just say
okay.
that.
You're supposed to do that in that.
But even if you don't have a lead foot, I mean, it's expensive. It's extremely expensive.
It is.
It is, it is.
Yeah,
Or,
for sure.
One of our sons had a light, mild fender bender where he rear-ended somebody, and it ended up turning into, this guy all of a sudden goes nuts and, and goes way outside, and we, then you're left holding the bag, right? And trying to, because you have so many people trying to take advantage of the system, and it's just, it's a shame.
Yeah.
When it comes to hacks too, like you mentioned, Tim, another one is I've heard don't ever call the 800 number. That's why you want to know who your agent is.
Yes.
So you can call them directly.
Yes.
You can call somebody to inspect it first,
Right.
all that stuff.
Yes.
Like I was told never call an 800 number for insurance.
And it's all
because
recorded
that's what they will do.
too.
Exactly.
That's the other
Josh,
thing.
and I'm glad you brought that up, because that is for sure a $0 claim, even if nothing. If you have 3 $0 claims, you're just thinking that, you just want to make sure, and all of a sudden they drop you.
Yeah.
And you guys had an insurance agent on your show that was a sponsor here that's a broker, and I was talking to him the other day, actually just this week, about
you can
Geico.
Say who it is. You can shout them out.
And so he goes, listen, if your mom has a claim, she can call me, and I'll help her navigate that. So to your point, Josh, I mean, that makes a difference, right?
For
It
sure.
does.
It's so funny. I've said this before in other shows, maybe not with you all, but I was with, it's 3 generations of the same insurance company for all of our assets. And I was purchasing a home now a couple years ago and had him on speakerphone with my kiddo in the back. And we were in the car for 2 hours on hold the entire time. And this was several years ago, and he was just learning to kind of figure out words and sentences. And the recording kept saying, "We apologize for the inconvenience, but you're very important to us." And this little kid goes, "Mom, what does inconvenience or apologize mean?" I go, "Means they're sorry." And he goes, "I don't think they're sorry." Kid you not,
Right.
in that moment, I hung up, got a new insurance agent
Yes.
that I text
Yes.
now that I'm
Yep.
like, "Hey, I just got in a fender bender. This guy hit me." He's like, "Do not do anything. Don't just have
I
him
love
fill
it.
everything out."
Yes.
So
Yes.
it's so nice that you all
Yeah.
are local. You have cell
Yes.
phones. When we're doing
Yes.
our loan, I'm like, "Michelle, hey, I'm going to text you. We got to call
Yes.
you. Let's figure
Yeah.
this out."
Totally.
So
Yep.
it makes such a difference
Well, I mean,
to have someone
it
you can
is
talk
true
to.
with, you guys with all the stuff. It is true with me and Michelle, especially my clients who are, retired, and you got a sweet little 82-year-old woman, and she gets stuff in the mail, and there's so many bad
Yeah.
actors out there,
Yeah.
right? That are like,
Yeah.
because all this stuff is public record, these loans, and I'm always like, we may not service your loan forever, but call me first. I can help you navigate that. I want you to call me because I don't want,
Right.
sweet little Betty to get taken advantage of.
Completely.
Right? It's not right, and we should do more to stop. I wish the government would step in and stop a lot of that, but unfortunately,
I know. And it's so amazing. I came from the mortgage world, and I've learned more from you all that I never knew, actually, even being in the world. So it's a very complex, or it can be. And to have someone with an expert to say, "Here's all of our information. How does this work?"
Yeah.
So it doesn't
Pieces
have to be
together.
overwhelming. It can really have someone walk through it.
anymore today, Sarah, I'll have so many of my people will just take a picture with their smartphone of the thing they got in the mail and
Yeah.
just text it to me.
Right.
Tim, is this garbage?
You're like, "Yes,
Yeah, throw it away. It's-
99.9%
That's
it's
crap.
garbage."
Get out of it.
And it will look like it's from us because they'll make it look that way at the top. And I always tell my client, "Okay, hold on. Look at the very bottom. That little baby font. What does that say? Oh, you're right. It does say they're not affiliated." And like, right, it's junk mail.
Yeah, it's
Yeah.
really bad.
Yeah.
It's a
Make
bummer.
sure you know who you're dealing with.
That's right.
Yeah.
And you guys do a lot of, home purchasing as well as refinancing. So a lot of refinancing out there. A couple questions. First, what rate drop would you need to see to spark a refinance boom coming up this year? Because I've had my house 20 years almost. It was back in the day when it was just people like, don't touch it, because it's like below 4%, something like that. So people weren't refinancing for a while. Then with the high rates, people definitely weren't refinancing. So what rate do you think it would have to come down for a lot of that to be an option for people?
Yeah, it's a really good question. What we're seeing and what most people are looking at in the market is how many people have rates at this, how many people have homes with mortgages at this rate, this rate, this rate. And for the first time ever, we have more people having rates like in that 6% range than the 2% range. So it's kind of finally flip-flopping. People kind of feel like, and when I say people, people in my industry, people that we follow, economists, etc., feel like if we could get into those that really low 5% range, it would make a big difference. I'm already doing a lot of refinances. In February, 50% of my loans were refinances. I had five refinances and 5 purchases. And actually I have a couple more trickling in here that I think will make it. But, and for various reasons, because you would say to yourself, well, why would somebody do that? Right. Well, if somebody had a 4% rate, why would they refinance to a 6% rate? Well, it could be in one of my clients' situation, they had a $100,000 home equity line of credit behind it, which had hit, 7.75%, 8%. They had $50,000 in credit card debt, and they owed some IRS money. And, so in that scenario, when we refinance, people go, "Oh, I have a 4% rate, or I have a 3.875% rate." But you have to look at the blended rate of all of the money, of all your debt. Because if you have a $100,000 HELOC at 7.75% and you have $50,000 in credit card debt at 30%, because that's where they are right now, or maybe 20 something at this point, but you're not paying 3.875 or 4% for your debt. You're paying a lot higher. And that blended rate makes a difference. So in this scenario, yes, we paid off a 4% loan, but at the end of the day, after paying all those things off, we saved the borrower $2,000 a month. And that cash flow is what's important. You can't deposit, I always say this, you can't deposit the number 4% into your bank account. Like that does you no good. Like it might feel good to you, but if your cash flow is not there and you can refinance and create cash flow, that's what's the most important thing. And a lot of times you could take that extra money. So if it is $2,000 savings, maybe you take $500 of that and put it back in the mortgage every month to get it paid down quicker, shorten that term, create a savings plan with a high yield savings, create a 529 plan for your kids for college, so other things that you could do. But if you're Tim, you might buy Bitcoin, but like the refinance isn't always about the rate. It's about the strategy. What are we paying off? Can we create cash flow? Or is it a divorce situation and one person wants to stay in the home and pay the other person off? Or are we going to pull cash out to send a kid to college? Right. So there's a lot of reasons where somebody might refi, but there are plenty of people that should do it and they're stuck because they just can't do it at that 6% number. They just can't bring themselves to. So there's a lot of studies out there that show like if we could get into that low 5, high 4, we would really see a huge refinance boom.
Yeah, I agree.
And I bet this situation, I mean, you mentioned HELOCs, you mentioned credit cards. I bet you see a lot of this on the reverse side, Tim. So how do really like HELOCs for seniors, how do they pair up with the reverse mortgages?
With the reverse mortgage, yeah. Great question. Reverse mortgages, today's reverse mortgage is actually a first lien HELOC, a first lien home equity line of credit, essentially. So what that means is that if I'm 70 years old and I have an $800,000 home and I qualify for a $300,000 reverse mortgage, okay? So I can borrow about 40% of the value of my home, roughly. I may not need all that money right away. So instead of doing a traditional HELOC at, say, a local bank, because if I borrow $100,000 from that HELOC, I'm on the hook for paying money every month, right? A payment.
And anytime prime goes up, your rate goes up.
Anytime prime goes up, my rate goes up. After 5 or 10 years, the payment's going to go up significantly because then it goes to a fully amortized payment. So there's a lot of reasons if you're on fixed income not to do a HELOC. Essentially, what you can do is at 70 years old, I could take out a $300,000 reverse mortgage line of credit. Now I can use that and have that available. So if I do need $100,000, I can pull it out. I'm not going to get stressed. I have no monthly payment, and I can live there and have a lot more financial freedom and financial peace of mind. And it's a lifetime HELOC. A reverse mortgage is essentially a lifetime home equity line of credit. And by that, I mean, it doesn't have a 5 or 10 year drop period like a traditional HELOC does. It's good for as long as I'm alive and living in that home.
I did not know that, actually.
Yes. And technically,
and it grows as well, or it can
grow,
additionally,
right? There's even a cooler feature. But technically, a reverse doesn't have a term. It becomes due and payable on the youngest borrower's 150th birthday. No joke, because of the federal insurance, because of the FHA insurance. So essentially, if I do that at 70 years old, I could have that HELOC in place for 30 years if I live to be 100 years old, as long as I'm living in the home. So it never goes away. It's always there. And one last cool thing that Michelle just touched on, the line of credit actually grows. The unused portion of the line of credit grows by whatever the effective rate of the loan is. So if I'm paying roughly 5% or 5.5% today, that means I have $300,000 in my reverse mortgage line of credit growing at 5.5% annually. So it keeps giving me more of my equity.
It's trying to access that appreciation.
Yeah, it's like
So it's kind of growing with the appreciation.
It kind of grows with the appreciation.
So if you're not, if it's unused, if it's untapped,
it's untapped.
Or even if it is used, it'll grow, which could create more
More
availability
money.
that you didn't have when you first. Maybe
So over
took
a
all
number
the
of
money.
years, that 300,000 is now grown. Oh, I got $400,000 in my
Yeah.
reverse
amazing.
line of credit.
Yeah.
Reverse which is really cool.
Yeah.
Yeah.
We need to lower the age for reverse mortgages.
There is a
Yes.
lower aged product, but it's not the FHA. It's not the HUD backed product. It's not a government backed product, and it's just different. It has higher. What's the difference with it? Higher
Well,
rates
it has higher rates and doesn't have the federal backing, so the rates are higher to make up for the lack of the federal insurance. And so
and
Do
you
you
can
know the
only
rate?
use it on certain things. Like how old do you have to be for that one?
55 or older.
Yeah, all right. We still don't qualify.
Yeah.
You
speak for yourself.
youngins.
Speak for yourself,
Yeah,
Sarah.
you
Everyone
youngins.
else, this is
Yeah.
amazing.
Yeah.
No, that's great. You had mentioned, Michelle, a little earlier about like AI, and I know a lot of people and other technology tools. I mean, it is here. I don't think it's going anywhere. If anything, it's going very quickly in that direction.
Yes.
So I know some people can go through the whole process and go online and see if you're qualified. So, what are some reasons why people should not do that? to
Oh, and I
actually
got in the mail that I could be qualified for a mortgage too.
I get them
it
credit
was
cards
great.
too. It's
Yeah.
awesome.
It was like getting the sweepstakes from Ed McMahon back in the day. It was
Just
great.
$1 million.
Yeah.
Publishers Clearinghouse.
Well,
Yeah.
that's the perfect reason not to do it because, it doesn't know. It's not a problem till you get towards the end and you're ready to close, and then all of a sudden, all of the, it's whatever's put in is what you get is the output, right? So junk in, junk out. So a lot of applications, the majority of applications that I receive, when people put the information in, it's their opinion of what they think their income is, and then we get the actual documents. To my point, especially self-employed or people with bonus or commission or overtime, a lot of times they'll state what they made the last month or two. Well, we use a 2-year average on overtime and commission, or, so there's a lot of things that AI, like the initial loan application is only as good as the information put in. Now, once you've put your documents into the file, there are AI programs that know how to read the bank statements and the tax returns and whatnot. But again, to my point earlier, sometimes tax returns are funky. Like there's some things going on. Like I owned a property and then I sold it and then I bought another one and I cashed in and I have capital gains, but I don't have those assets anymore. So the tax returns, AI doesn't know all that. Okay.
Right.
And so you could get a really faulty approval, and that that happens a lot, even with eyes of underwriters that don't know what they're looking at, let alone AI.
Garbage in, garbage out.
Yeah, garbage in, garbage out. So the reason you don't want to do that is, for one, your approval's not really solid until it actually gets fully underwritten. And many times those AI approvals get twisted and they become not what they started out as. Okay, so things change along the way. Secondly, there's just, to your point, you said it earlier, mortgage is complex. It's not like buying a pair of shoes online. There's a lot that goes into it, like picking a rate. Do I pay points and buy the rate down? Should I take is the lowest rate always the best? Not if you're paying a bunch of points, maybe.
Yeah.
But maybe it is. How long are you going to stay in the house? There's so many things that really an advisor is going. It's just like anything. An expert is going to save you money in the end, because anything you try to do on your own, usually you end up paying more in the end, because what you think you knew, and especially a lot of my younger buyers who do so much research online, they come up with all their, they want to be their own doctor and do their own prescription and whatever, but they don't know, and they don't even know the questions to ask sometimes.
Right.
So my opinion is, I love AI and I use it for things all the time. But I always say I'm high tech, high touch, because I like to add it to the mix, not in place of. And I do think AI is important. It helps us be, we can be quicker. It helps us be more efficient with things.
I'm sure I had a better email.
Better systems.
sometimes.
Helps you write a better email.
Completely.
So Sarah, here's a fun fact about AI. I just heard this, and I might be wrong on the numbers, but the percentage is the same. They said it took 8 years for Google to get 1 billion searches a day or something like that. Okay, a huge number. It took 8 years before it was that. It took ChatGPT 2 years to reach that same number of searches every day. So it's like he's like, AI's here to stay.
Oh yeah.
It's
And it
been
gets
it's
better
been
all the
adopted
time.
faster than Google was.
Yeah. Oh,
you
yeah.
know, as a right?
For sure.
It's really great for even, you know, like reviewing contracts and things, but you have to be careful. Like I would never put a client's personal info into there. That's another thing. You know, if you don't know who you're working with, you don't know where your info is going, right?
Right.
So you want to know that lender has everything secure, that, you know, their software is all encrypted. You know, we never even send like wiring instructions out through emails. We never put somebody's information into ChatGPT. Like that's a huge no-no, because that stuff is public, believe it or not. Even if you have the paid subscription, there's certain things that, you know, so, but it's great for reading contracts that are your own, that's not something you're worried about. It's great for complex explanations of like a 3-2-1 buy down and how does it work? And so those are the things that I think AI is great for, but you still need a person. In my opinion, I like a person. There's nothing worse for me than getting on a phone call, to your point, and you're on hold. Press number 3 for so-and-so. And then and then AI will get on there and it'll keep giving you like an answer that's not really what you need.
Yes.
And I'm like, I just want a person.
I want representative. How many times can I say
representative?
it? Yes. But it is good to still, to your point, like high tech, high touch. And we do it too. We're using Perplexity AI and ChatGPT because it can really be a wonderful tool.
Yes.
You know, we've gone back. I mean, in the .com era wasn't that long ago. When you think about the big scope of things, all of this has happened in our lifetime.
Yeah.
We had this conversation earlier about how industries are changing, and it felt. Looking back at it, it felt so long and arduous from the .com to really what the internet did, and now AI is taking off so quickly, which does give me cause for concern for just what it's going to do to the human capacity to it, but and to what's going to happen to our brains throughout this whole process.
And also, like Tim and I were talking about this morning because our 20-year-old had was telling us about these. All these AI bots that have their own chat room. Have you heard about this?
Yes.
And they talk to each other, and they are trying to figure out how to like outmaneuver the human, you know, their human that owns them or whatever.
Coming up with their own language, taking it offline, so you can't.
And they want privacy.
They want privacy.
And now you can like they could hire a human because they don't have hands to go do what they need, but they could like hire you, pay you, prostitute you out to go do something for them. I mean, how scary is that?
It is. It's what's the show that came out, Westworld?
How much do they pay?
I don't know.
You and I went totally different on it. I mean, it's true. They're going to take over the world.
It's a little scary. Yeah.
Well, I always say Terminator, right?
Yeah.
We thought that seemed ridiculous, and now we're like,
we're there
for the older. The middle-aged crowd.
I don't really like that part of it. I don't want to think about that. You know, like I know Elon Musk said, listen, once that genie's out of the bottle, like we don't know where it's going to go, what's going to happen. But for now, like I would say it does have a lot of amazing advantages if it's used the right way.
Completely. Yeah. Use it responsibly as a tool like you do everything else.
Right.
Yeah.
And other people won't use it responsibly.
Of course.
But I remember, I mean, you know, when the internet came out, I mean, so many people were afraid of that. So many people were afraid of, you know, the year 2000. I mean, it's going to be a scare thing.
Yeah.
But I think, you know, life's going to go on.
It's going to keep
Y2K.
Y2K, exactly.
Yeah.
Oh my God, the world's going to end because of two digits. Like,
you know, who knows? AI might actually be the one that actually takes us down. Who knows?
But
that's okay. I mean, the latest Mission Impossible kind of freaked me out. And like, this could be our future.
Yeah.
What freaked me out is he still looks young.
Yeah.
That's what freaks me out.
I know.
He still looks pretty good.
Question, actually, especially for first-time buyers in Colorado. I actually didn't even know this. I know FHA. Everybody's heard of FHA. But how does FHA and CHFA compare in terms of down payments and eligibility? Because I didn't even know there was a CHFA.
Look at you doing the research on the line.
Okay.
On the old internet. So FHA is the federally HUD. It's HUD. It's a federally backed government loan. The borrower is allowed to put 3.5% down. You actually do not need to be a first-time home buyer, but it does need to be an owner-occupied property, and you can't have another FHA loan within 100 miles, and like there's all these other guidelines.
So it can't be a rental property or anything like that.
It's usually used for a first-time buyer because they can do the 3.5% down. They can have a little bit lower credit score. They can have a little bit higher debt to income ratio. It's more lenient. And the rates are actually a little bit better if you have lower credit scores than if you tried to do a conventional loan with 3% down. You would just get crushed on the rate and the PMI versus an FHA loan. the CHFA that you mentioned, and it's called CHFA, and it's Colorado Housing Finance Authority. So they are a state organization. They're down by Coors Field. Their office has been, I don't know how long they've been in Colorado, but a long time.
Yeah, decades.
And they're basically a down payment assistance organization. Now that CHFA is the organization. The down payment assistance is provided through the organization. And it's changed over the years. There have been bonds, there have been grants, there have been all different ways that money comes in. But at the end of the day, that money is used as a down payment assistance for a buyer. There are income limits on the program. So if you made, $300,000, you're not going to qualify.
Right.
But it's a really high number. I forget, it just changed this year for 26, but it's like $150 some thousand. I mean, it's a fairly high income number.
Yeah. Wow.
Which sounds like a lot, but after taxes, what is that? Maybe
so this is
and
all
then if a family of two,
yeah.
and but anyway, it's a fairly good number. CHFA will provide the down payment assistance. It can be in the form of a grant or a silent second mortgage, meaning there's no interest and no payment due until the home is sold or refinanced. So it's like getting money from a relative. Like you literally have no payment and no interest.
Right.
They will give you the down payment up to 4% of the loan amount as the down payment. And it can be coupled. It can be used with an FHA loan or a conventional loan. So Fannie Mae, Freddie Mac, VA, or FHA, any one of those programs, you can do a CHFA loan and then tag on the down payment assistance behind it. And so typically the only requirement is the borrower must come in with $1,000 of their own money. That's it. Other than that, it can be gift because they're not going to get fully covered with that 4% down. It'll cover the down payment, part of the closing costs, but not all of them.
Gotcha.
So still they might need like $3,000, $4,000, $5,000. Seller can pay closing costs. They can get a gift. All of those things can be used, but they have to have $1,000 of their own money in the deal. But that's it. So if they could get down payment assistance and have the seller pay, $4,000 in closing costs as an example, or $5,000, they might come in with $1,000.
Wow.
What are the major? I didn't know any of this stuff. I was uneducated when I was
That's
in
why we
mortgage.
have friends in high places.
Man, that's amazing. What are the biggest cons of doing that?
Well, first of all, if you do the silent second, like we're talking about, which most people do because you don't have to do that one. You could do the grant, but the grant's a little bit more, there's more to it, and there's some tax ramifications things.
Okay.
So most people do the other one. And the one con or negative would be technically your loan to value is you don't really have any equity in the home. Because if, let's just say you did a 97% first conventional or a 96.5% first FHA. So that means like they put 3% down or 3.5% down. And then you put that 4% loan amount, not 4% rate, it's 4% of the purchase price on top.
Okay.
You're actually at like 101% loan to value.
Okay. Got
Now in 21, in 22, who cares? Because by next year your house will be worth 30,000 more, right? Or 40,000 more.
Exactly.
Because homes were like, shh. But now that could be, if you don't know you're going to stay in that home.
Over the last year and a half.
Yeah.
We haven't been seeing all that appreciation,
maybe
right?
all of a sudden they're getting a divorce
Yeah.
or they're getting a transfer, they lost their, and they're trying to sell. That could be a difficult situation for them. So, that's just a good conversation to have. You want to make sure people have a backup plan, or they're definitely staying in the home, that they understand.
Okay.
Mainly that they understand, right?
Yeah.
You want them to understand what they're doing.
Right.
I have clients that actually have money for down payment. I have a guy right now who's going to buy in the Springs, but he is limited. He's got like $20,000. So we are still going to use down payment assistance so he can pay off a big installment loan that's got a big payment, like a $400 a month payment. And he's going to pay off a credit card. And that way he's going to use his money to get rid of those debts, use the down payment assistance for the down payment, and hopefully we get the seller to pay closing costs. They're out looking at properties right now with one of my good realtors who handles the Springs.
I love this. Well, for those of you that just jumped on, we have Michelle and Tim Oddo with us, and you can look them up on the oddogroup.com. And I mean, there's so many takeaways. If you did just come on, please watch it from the beginning if you're looking to buy or sell. And of course, rates are going down and have gone down. So it's a great time to buy and or sell, and of course to refinance. But I love what you have brought up, because we're all so heavy on the rate focus talk. And everyone I know has credit cards. cards. Everyone I know has another asset. And I literally just called my credit card company the other day to pay it off. And they were like, well, this is your rate and it's not gonna change. I'm like, holy crud, that's a high.
Yeah.
It's so high.
Yes.
I know.
So even if you're at an 8% or 9%, I mean, if you can pay off your credit cards, why aren't you going to do it? So
Right.
again, it's just to be logical and really think about what your overall rate is with all of your assets. So I'm so glad that you brought that up because I don't think people really take that in.
Yeah, I mean, you have to think about it and be strategic because, right, if you only owe $100,000 on your mortgage, but you have $200,000 of debt at a 18 or 30% rate,
Right.
guess what? It's going to make a lot more sense to combine all of that, right?
Completely.
So think about it, be strategic, and actually do the planning of it because there is a big planning element to all mortgages, really.
Yeah, it's really about the strategy. I mean, sometimes we'll even pay a car loan off, and even though the rate maybe isn't high on the car loan, but they need cash flow. If somebody like really needs cash flow, it's a short term. And there's some negatives like, well, why would you put that car loan on a 30-year mortgage, right? That seems silly. But if you're going to give somebody a major cash flow and they're going to be in the house 5 or 6 years or 7 years, and they could take some of that money and pay other really high debt things off, high rate, they can maybe even pay more towards their mortgage every month. There's things that they could do with that money. You have to look at the whole picture.
Completely.
It's never just like one size fits all. That's the thing. And we
I
really
agree.
do that. We look at amortization schedules and we look at if you put the money back into the home for the next 5 years, what would that look like? And if you did a high rate savings plan, just different things that people aren't always thinking about.
Completely. Just another reason why to have experts and people to actually walk you through this because I'm not thinking about any of this. I'm like, please take it and what makes the most sense for
make this look
what,
good.
Please tell
Make
me.
this pretty.
Make it look pretty because this is how we want our life
And
to
that's
be.
my favorite because I love to provide solutions that, nobody, being an order taker is like, that's not rewarding. Like I had a story just recently having a client who wanted to pay off, how much time do we have? Are we good on time?
We're
Okay.
great.
So they had a home, you never know. I mean, could go on forever talking about
we'll catch
mortgages.
ya.
I get super excited and I don't really ever get bored of it. Not like my husband. He's like, we're done. We're going home. We're done. I'm like, no, I want to talk some more. But
He's thinking about that Coors Light right
yeah,
now.
he's thinking about dinner.
Coors Light and a taco.
There you go.
So I had this client, they have a home in Evergreen and they owed $400,000 on it and the house was worth 1.2 and they want to buy a fishing cabin up by Jefferson Lake because they're big fly fishermen. So it was a really cool cabin. It was going to cost $385. Not really easy to get a loan on it though. It was a little bit rustic, some things going on there, but they have a ton of equity in their home, right? And they had retirement money, even though they're not of retirement age, they had a pretty good retirement account. So they called me, the realtor had them call me to get a home equity line of credit because she thought, well, if they could, the borrowers thought we're going to get a home equity line of credit for $185,000, like HELOC, and then we're going to take $200,000 out of our retirement. So they're telling me they want to do this, but my wheels are going, what? Like, why would we do that? Let's. So I said, okay, that's interesting. Here's what you want to do. I'm writing it down, whatever. What's your rate on your first mortgage? 6.875. Huh. Okay. Send me your mortgage statement. So at the end of the day, it was like, why would we leave a 6.875 first in place, put a second HELOC on there for 7-ish, and pull money out of your retirement, which you're going to get taxed on and penalized. When you have a $1.2 million home, let's just do a cash out refinance, all at like 6.125. We were able to get them, and get the whole amount for the cabin. Don't touch your retirement, and lower your mortgage rate. And of course, their financial advisor was like, "Heck yeah!" Like, I'm so glad you asked somebody for some solutions here versus just being your own architect of your finances when that's not your strong suit. Not to take anything away from them. They just, in their mind, thought my rate's 6.8. Does it really make sense to refinance? They're not that much lower yet. I don't really want to touch my mortgage. We can pull the money out of retirement and not make payments on it. So thinking very like short term, but when we did all the numbers, like that just didn't make sense. So that's where the strategy is really everything. And yeah, it's really important to have somebody not be an order taker and really be an advisor.
Completely. And that's why I love how many different programs and thinking outside of the box and truly having that conversation with them. I'm the same way. I have this vision of how it's going to go. And there's so much on the peripheral that I There we go. That I don't see or that I don't know or I don't think about. So
right.
Absolutely. If you guys truly give them a call and have them just walk you through the process.
Well, and it's just, the media only touches on the rates because that's it.
Right.
But it's a whole picture.
It is. Well, and
so.
what else I want people to think about in regards to the rates as well is when they go down, then you have more people going after the same house. And then you get in a bidding war, and a lot of times you're going to end up paying more anyways.
Yes.
So don't focus on the rate. Focus on, is this the right time to refinance for me? What's going on in my life? What are the changes? What are we doing? Do we, so.
So this is so crazy. The video we're sending out this weekend, we send a video out every weekend to our database, like all our realtors and clients. It's slightly different for both, but usually it's the same video with a little bit different messaging. It's actually you just did my video. Like I'm not even kidding.
I didn't even watch it.
I'm not even kidding. Yeah, it was basically like, should you wait for rates to go down? That's what everybody thinks. But technically, when rates go down, more people jump in the market, which creates more competition, which creates prices to go up, and then you actually pay more for the home. You can't. Once you lock that home price in, it's locked in. You can't undo that. You can always refinance your rate. Right. So the better strategy is to get the better price on the home today when less competition, sellers are willing to pay for your closing costs a lot of times, help pay for a buy down of rate, help with, to your point, not have 10 people that you're fighting against. So you have to keep upping your price or waiving an inspection or waiving appraisals. Those were the things that we saw a lot of when rates were in the 2s and 3s. So it was great and everybody felt like it was free money. But a lot of people paid way too much for homes,
right?
And overpaid. And if they're still in it and they love the home, don't fret if that's you. I'm not trying to make you feel bad because plenty of people did that and still made money on their home because if you bought the right home in the right location. Also, if you're going to stay in the home, it will come back. So don't panic. But it's only if you bought with very little down and you need to move and you overpaid, you're going to be one of the few that does get hurt from that. So don't wait for rates to drop. Buy now, refinance later. That's a better strategy.
Yeah.
And I've never really thought about that until later, or till around now. I mean,
till this minute.
Not this minute, but recently,
you're
in
not
the
like
past
me.
few months, I mean, lower rates
Yes.
is really, I always thought low rates is a buyer's market. Low rates is a seller's market.
Yes.
Because then you have a lot of people wanting houses and overbidding and everything like that, where really when it comes to what is a buyer's market, it's kind of the higher rates. Because then you don't have a lot of competition.
That's right.
And then you buy it, rates go down, you refinance.
That's right.
And you know what? If rates go up, okay, you did good, right? If rates go down, refinance. If rates stay the same, you're okay.
great.
Who cares?
Don't do anything.
It's like you really can't lose,
Exactly.
Yeah, exactly. I love it.
No, you're in such a different camp. I move like every 1.5 to 2 years. I've been voluntold, that I can't move again for a hot minute. So
This is it.
This is it for
Right.
the long haul. Even my kiddo was like, again, he's so wise for age 7.
Yeah.
He's been in 5 houses and he's 7. Yeah. Thank you for that look.
That's
And
a lot.
I have the little, there's something with his brain when he's in the car. We were in the car and he's like, Mom, don't you kind of lose money when you're doing all of this? And I'm like, sure do.
He really said that at 7?
Yeah. Oh yeah.
That's
he said it to us over.
amazing.
We were looking at Christmas lights and he was
That's
like, when are we going to move
amazing.
again?
Yeah.
I was like, Mom, this sounds kind of expensive that you keep doing this. So I've been voluntold that I need to stay in this home for the period of about 10 years.
There you go.
So
Probably a good plan.
yes.
Exactly.
Get him out of high school.
7 is
Exactly.
Get him
I
out of
think
high
5
school.
to
That's
7 should be a
exactly,
minimum, and 10 is great. And it goes so fast. Like we've been in our house, I think, right about 10 right now.
It'll be 10 years this year.
And I'm kind of surprised. I'm like, God, it feels like 4. I don't know.
Yeah. Well, when you love what you're doing, you love who you're with and where you are, then it does go really fast.
That's right.
Yeah.
So
time
true.
flies.
Yeah.
Well, we are running out of time, but thank you very much for coming
Thanks,
on.
guys.
Yes,
You guys
thank you
are-
guys.
I always love spending time with you guys.
Yeah.
So
I do too. I learn something truly every time that we have you on.
We just love you guys because you're
It's-
fun.
well,
Let's talk about all the
yes,
things.
we are so fun.
AI, Broncos, all the things. Throw
All
a
the
topic
passion
The
out.
things.
important stuff.
That's
Yeah.
right, exactly.
Yes.
If you did kind of catch the end part of this interview, it is going to be on the K4CO Radio social media platforms for at least a month. So check it out. If you know somebody who's just kind of thinking of either refinance, purchasing, share it. And if you have any questions at all, just go to oddogroup.com. That's ODDO group.com. They're a Colorado, Littleton-based mortgage lending team, but they take care of the entire United States. So do know that. They can take care of you anywhere you are. Led by senior mortgage banker Michelle Oddo and reverse mortgage specialist Tim Oddo with over 25 years of experience, helping clients secure homes with many different types of options. So any questions, even if you just have a couple questions, they're going to tell you straight up, flat up, no, this isn't a good idea. Wait for this, whatever it be. So you guys, I love talking to you because you love just educating people. And so you'd gladly pick up the phone just for some questions.
All the time.
So for regular mortgages, 303-961-6906. You can also call Tim, who is the reverse mortgage specialist, 303-233-4500. I still am jealous about that phone number.
I know.
I absolutely love it. But definitely check him out. And yeah, thanks again for coming in.
Thanks, guys.
Of course. Stay tuned. In about a half hour every single day, starting at 7 p.m., we have one solid hour of only Colorado musicians in the K4CO radio rotation. The rest of the time, it's 1/3 of our rotation. And then tonight, 9 p.m., put those kids to sleep and listen to Kind of Vague Radio, hosted by Andrew Talon and Rob Dixon. Colorado, they've been here their whole lives. They're musicians. They go deep dive into the Colorado music scene. So take care, everybody. Have a wonderful Thursday night, and you'll be hearing from us soon. Take care.